Okay, we've made it to December 2024. Let's check out how things went. Let's take a look at the stats. We continually built inventory throughout this entire year, right? We've had some ups and downs over the past 5 or 6 years. This last year, super steady build, that purple line. Then we ramped up right in, I don't know, August when we had that crazy rate drop. A bunch of sellers saw that coming and they said, let's load on. So that's what we did. And then we finally turned that corner in the last couple of weeks, right? So seasonal decline is usually the case in the later part of the year, right in December. People want to go have their holiday and try again in the spring. So we're seeing that decline. Technically, active listings were up, but they've turned around and they're coming down, right? So heading down, not anything insane. New listings are down. That's the reason why we're starting to lose some of that inventory. Fewer people are listing their homes, so the delta between October and November is about 2,000. That's significant. That's a big chunk. That's more than 20%. So we have a number of new listings, right? We've also got more total canceled listings. If you look at the count this year, this just keeps a tally, as the year goes by. And we've had more canceled listings this year than the past 3 years. So that's another big contributor to that number going down. We've also got expireds, right? All these numbers matter to the total number of listings. 2022, man, we had a lot of a lot of listings expire in December. I'm sorry, yeah, expire in December, and then in December of 2023, about half of 2022, and now we're on track to probably be a little bit higher. I bet we beat 2023 with our 2024 numbers. So next month I'll put this slide up and we'll take a peek and see how we did. But all that said, the reason I showed you those slides is because these are the contributors to that reducing total number of active listings. And normally that's affected by our demand, right? So our number of listings under contract. But you can see this purple line, we're in decline, right? So we're seasonally dropping off, and we're probably going to see that get pretty quiet probably into the 4,000s before the end of the year. So that's super normal, but it's not really contributing to the decline of actives. That's why I showed you all those other ones. As far as a contract ratio goes, this is your general market health. We're not too far off from the previous couple of years, right? So we start in September and take it to November, just so you see the same group of months at the end of the year. You see a seasonal decline. In 2023, we were a lot hotter in October, November, but you still saw that decline down to 40. This year, we kind of started out low, so 35.3, and we've been declining since then. Now we're at 30. Feels pretty quiet compared to last year. The difference between contract ratio of 40 and a contract ratio of 30 is, it's obvious. You can feel it out there. So Cromford Market Index, this is our forward-looking number. It's finally turning the corner, it seems like. It's been falling. It's been falling since January, February of this year, and this is really just the predicted health, the predicted strength of the buyer market, right? The predicted strength of the market in general. We've just seen sales volume decline throughout the year. We've seen our actives grow, so our inventory has grown. Looks like we might flatten out and turn the corner, which is normal. We should see this number tick up in the spring. We're just going to see if it goes up above 100. So technically, with all other data removed, the Cromford report should show a balanced market between 90 and 110, right around that 100 mark. So as you can see, we're right at 86.8. So that feels a little cool. I bet that turns around and that gets into the 90s by mid-January. So we'll watch this number as well. So all in all, it was kind of I guess it was kind of disappointing, but it was just a slower market. There was less going on. There were fewer people that went out there and transacted because, when the prices are up and the interest rates are up, so payments are high, you have people moving that need to move, that have to move. And that's what's driving the market, where before in 2021, 2020, you had people moving for fun. You know, they looked at it and they said, well, you know, we could get a bigger house for the same payment, so let's just make the move. It kind of made sense. So as soon as those tables turned on the interest rates, it kind of became more just people that needed to move. Their families were growing, or they're downsizing, they're moving out of state, whatever the case. So you just have a lower volume naturally. Now this graph kind of is always going to remain true. This shows you've got to be priced, you've got to be in market, right, to get showings and offers. So if that house is worth $500,000 and you list it for $500,000, you're going to get some showings and eventually you're going to get some offers. If it's really worth $470 and you list it for $500, expect crickets. I mean, especially in a market like this, you don't get movement on homes that aren't priced appropriately. And this is all going to have to do with the surrounding competition, how much demand, how many people do you have coming in and looking at homes in general. So if nobody's coming in and seeing homes at all, you know, these you can't really expect to have a ton of traffic in your house and make it happen that way. So, you know, with a average of 98% from sold to list, this graph is always going to be a good tool to use to figure out where you need to be to get the right action to get it sold. So we'll keep it short. It's a year end. You know, we're getting close to the middle of December. January, February, there's going to be a lot of new data, a lot of new activity, hopefully some changes, something fun to report on. But as of now, you know, it's treat people right. In a world where you can be anything, be kind. Keep in mind real estate is all local. So we'll see you guys 2025.